Well, I'd like to thank you so much for joining me for this webinar because, statistically, this is one of the key differences between businesses that survive and thrive and businesses that never ever get close to realizing their potential. It's all about the importance to ensure that we plan and we do a good plan, a plan that really is going to improve our chances of success. Now, many of you here will have started into your business with at least a set of particular expectations relating to how you thought the business could improve your standard of living and the general quality of your life. In fact, that sort of measurement is just so important. We call it your professional well-being, and we've got a really well thought out calculator on our website that I really do encourage you to have a look at and to calculate your own professional well-being score, because as part of that you'll get back a report which will give you some ideas on how you could really improve that important aspect of your life. But with regard to planning, often your professional well-being is a main driver in pushing a person to start a business in the first place. It is possible that you may have also done some homework. You may have done some market research to get an idea of the feasibility of starting up the sort of business you are interested in. You almost certainly looked at your financial resources and made some estimates of how much you were going to need to invest before you even started to break even, and that break-even analysis is just such an important part of setting out in business. You may have thought about who you'd be in competition with and how you might capture their clients. But how many of these ideas and plans, even if you did consider them, did you actually write down? Many entrepreneurs use back-of-an-envelope calculations and work on the basis of personal goals that are not clearly articulated. They haven't formulated firm criteria or timeframes, deadlines to measure business outcomes. Now, if I asked you, why did you go into business? I'd expect a lot of the answers to revolve around just a few key issues. The most common answers we get have to do with the independence, being your own boss, the prospects of higher income, or a better lifestyle with perhaps more free time. In fact, that free time would need to be funded by that better profitability. Or the personal satisfaction of taking on and beating a challenge, and also, of course, a great desire to build a future for the family. But in reality, how often do we find that, in fact, a lot of the business person is more likely to involve the things that are on the slide right now? Things like working long hours and actually having less time for the family, or stressing out about having full responsibility for everything along with the financial and the personal risks involved with that, or dealing with day-to-day problems such as difficult customers and employees, or even chasing bad debts. If I asked you, I bet you could even add a lot of your own. Now, no question, running a business requires a lot of stamina, a lot of energy, and certainly a lot of commitment. But if the list of negatives sounds all too familiar, and they form a major and a constant feature of your business life, then it may mean that your business has gotten out of control. The way I put it is, you're working too much in your business and not devoting enough time to working on it. Those words courtesy, of course, of Michael Gerber, author of that amazing book about the E-myth, why small businesses fail and what to do about it. And in fact, that book is such a good read. We'll make sure that there's an easy link for you to access that book so that you can really start exploring some other ways of running your business. You might also choose to look at the webinar we did on that very topic too, and that's available. And if you need special codes to get in, please just contact us and we'll make sure you get those. One strategy for getting your business back under control, getting into a situation where you can step outside the day-to-day crises and actually work on the business, is through business planning. Do that effectively and you get your life back. You can start to enjoy more of the business positives and suffer few of those negatives. So we're going to have a look at how you can take a major step up in developing yourself as a business manager by developing a business plan. The business plan is an excellent tool in defining your personal assets and liabilities, describing the competitive conditions in your market, your financial needs, ways to promote your products and services, and assess the skill sets your team needs to be most productive. Let's first go over what is actually in a business plan and how to go about putting one together, and then we'll look at some of the ways you can use it to take control of where your business is going. In fact, the first step is to imagine where you want to be in, say, 2 to 5 years' time. You can't plan to get somewhere if you don't know where it is that you want to be. Business planning means, first of all, taking a step back, looking at the long-term picture, and asking yourself some basic questions about how you see your business in those next 2 to 5 years. For instance, you might ask, what role do you see for yourself? Do you still want to be involved on a day-to-day basis? Or do you hope to have replaced yourself with a manager? Do you plan to sell the business or even pass it on to one of your family members? And what about your financial situation? What level of personal income and lifestyle would you like to achieve through your business? What does the business need to do to provide that? How would it need to be performing in terms such as turnover, profits, team numbers, resources, debt levels, even your location? Your vision is your destination. When you know where you want to be, you can start planning that trip, that is, developing your business plan. Having established the broad goals, you then establish what you need to do to get the business into the right shape in order to achieve them. You work out activities and strategies that will provide your business roadmap for the next few years. Basically, this means that you write a business plan. A business plan is a kind of a map, you see, a map of how to get from where you are today to where you want to be tomorrow. Now, a business plan is put together according to rigorous criteria. It will detail specific activities in every area of your business. It will assign roles and responsibilities and set benchmarks and deadlines for achievement of the goals that you set up. So it's time to share a secret with you. It's one of the ways that we help businesses to move in the direction that the owners really want to go. And I thought you might want to apply this type of framework yourself. Now you can see that we've divided a business up into a number of what we've identified as critical areas that really need focus to give best chance of helping a business to achieve its potential. So when you talk about reaching your potential, this is the kind of framework that we would use to help you accomplish it. And you can see right at the pointy end is the vision. As I said before, if we don't know where you want to go, we won't be able to work out a way to help you get there. And I would suggest in your own business, you're already in the same situation. So it really is important to clearly identify and articulate just where it is that you'd like to be in 2 or 5 years' time. And it's so important that the vision is a very specific one. The last thing that we need is a fuzzy-wuzzy, generic sort of vision such as we want to be have a high reputation, or we want to be the best producers of globs in the region, or whatever it might be. We really need specifics. A specific could be, I want to reduce the time in my business to 20 hours a week within 2 years. That's specific. We'll know when we're there. Or I want a profitability ratio, or I want to ensure that business delivers $300,000 per annum in income on an annual basis. So having the specific targets allows us, or allows you, to formulate a plan to be able to achieve that. And that means that one day when you wake up, you can say, I'm there, I've achieved that vision. However, if your vision is a bit loose and not well articulated, such as we want to be the best producers of globs in the region, how do you know when you're there? How do you know if you're any closer this week than where you were last week? So it's so critical before you look at anything else within your business, any of those other components listed on the slide, that you're very clear with regard to that vision. What's in the business plan? Well, preparing one involves doing some very hard thinking about your business and making sure that your assumptions and your plans stand up to, well, tough scrutiny. But it's worth it. A comprehensive plan will provide a degree of clarity about your future and give you a head start over your competitors who may perhaps be acting on impulse or plan on the back of an envelope, use that type of approach. A business plan will include assessments of all parts of your business, such as I showed on the earlier slide. It will cover your business profile too, the nature of your products and services, and analysis of the market you're operating in, the mechanics of your day-to-day operations, your management structure, the qualities of your workforce, your financial history, and any possible threats or legal issues facing your business or even your industry. It will also contain your advertising and promotion plans, campaign budgets, and the timing of any special events. There's no one right way to write a business plan. The plan needs to reflect the nature of your particular business. A retailer and a service company will each emphasize a whole different range of issues. However, business plans have broad structural similarities, and the financial parts of the plan will conform to generally accepted accounting practices. I'm going to run through briefly the parts of a business plan showing where each of the major areas of your operations will be covered in it, and then come back to some particular uses of the plan once you've put their work into creating it. Now, the first part of your plan will consist of a cover sheet, and a contents page. Now, these pages are important insofar as they identify who you are. Design and branding issues are important, and you might want to have a look again at that webinar we did on branding. It's just so important and just so much more than just a logo. And the reason, well, you'd like to make it an impact on the reader who, as we'll see later, might not be only you, but could be your accountant, your banker, or even a potential partner. First impressions count. These pages should also enable readers to go directly to sections that interest them, as not everyone will want to read the whole document. But remember, those first impressions really do count. A number of people that you'll be sending business plans to, perhaps for investment purposes, get so many each day that they haven't really got the time nor the inclination to look at every single one in detail. So here's the area where you can really catch their attention and hook them into really examining your plan in a lot more detail. The cover sheet includes the name of the business and names of all the principals in the business as well. This page also provides full contact details of your business, such as address, the telephone number, your web URL, and so on. The body of the business plan begins with an executive summary. This section gives an overview of the business. It will hopefully show your business in a good light, based on some figures and other hard data from the market that you operate in. It can give a snapshot of spending and revenue numbers, for instance. If your business is having problems, the executive summary should instill confidence that you know how to work your way out of them. Although the executive summary appears as the first piece of content in the document, it's usually written last, as it draws together all the threads in your business plan and basically shows that you have a cohesive sense of what your business is about and exactly where it's going. The executive summary is very important because a good introduction can grab the attention of venture capitalists or other investors straight off the bat. You want to stand out and make people want to read through the rest of the document. It allows you to remain focused. Nothing else matters except achieving that plan. That's one of the pitfalls for most business owners. They prepare a plan, then they get swamped with other business issues, other challenges and opportunities, and it distracts them from the plan. Soon the business has moved off in a direction that makes the plan useless, so it's just discarded, left in a filing cabinet somewhere. Any decision you make with one question in mind. And that question, will that help me to accomplish my plan or will it not? The answer to that question dictates the response. So if a great opportunity comes up to buy a cheap piece of plant rather than leasing it or not having it at all, you ask yourself, is that part of my plan? If it's not, are you willing to do what it takes to create another plan that brings in the impact of this particular decision? And how does that compare in total? No decision you see is mutually exclusive. Think of that rocket example I gave earlier. If you take that plant, then how will that impact on your ability to fund other elements of your plan? You need to revisit that rocket to determine the impact, good or bad, on each piece of the puzzle. That's the key difference between a successful business and one that drifts from one opportunity, challenge, or crisis to another and never allows the business manager to achieve their goals. Sometimes opportunities, while looking like pennies from heaven, can often be the decisive factor that stops you from accessing the real riches that come from developing an outstanding business according to your plan. If your plan becomes outdated, then get a new one. The business profile, this is the very next step. This will include a description of your business, the industry it operates in, information on any developments in the industry that are perhaps likely to have an impact on the market, whether the business is new or established, and the background of the business and the owners. Good business is all about matching your most profitable customers with your most profitable products. Once you're sure you know what they are, you'll also describe your products and services and how they appeal to your customers and give an account of their relative strengths and weaknesses. You can include information on your facilities, your plant, and your production capacity. If you're running a services business, you'll naturally focus not so much on plant, but on the team who work for you and their experience and their qualifications. You also need to include a marketing plan containing a full review of your current marketing strategies. The marketing plan will provide a review of your customer demographics and feature a competitive analysis of how you rate against your competition. It should also identify your chief competitive advantage, clarify your pricing strategy, which of course assumes you have one, include sales forecasts, and give information on your selling and distribution methods, your packaging, your pricing, and so on. The marketing plan will not only review market conditions, but set out your strategies and your schedules for your marketing activities. You can also give information on the marketing media you'll use, whether you'll lean towards newspaper, internet, or radio advertising, for example. If you have a Mother's Day promotion, what steps need to be in place by March and February and so on as you work your way back? That will save you from being distracted from other promotional offers that might come your way, and as part of working on your business, as you won't have to quickly put something together 2 weeks beforehand. Remember our webinar on the 4 ways to grow your business? Now, this is an important part of the 4th way, improving the effectiveness of the way you do things. The business plan will also include a number of action plans. The action plans will outline the strategies you intend to implement to meet those larger business goals. They'll cover areas such as operational and management issues and cover how you run your back office. Your hiring strategy can also be outlined. They can be grouped into 3 broad operational areas, like on the slide: your operations planning, your management planning, and, of course, the contingency plans. Let's have a look at each one of those now. Among the action plans, you should have an operations plan. Even if you have a service-based business, there's still a production process, of course. At the end of the day, you produce something in exchange for purchase. As such, there must be a process. This section will include strategies to improve the way you do things, introducing efficiencies, and also ways to cut costs without compromising on the quality of your product. You'll need to cover your strategies for dealing with suppliers and managing your supply chain and your inventory. Your strategies for production planning will feed into a general strategy on how you plan to manage risks and interruptions to suppliers and to meet orders in a timely and reliable way. You'll also need a separate section on management and personnel planning. Naturally, this will tie in with the operations plan to some extent, but it will focus on your management style. It can lay out the management expectations held by the owners of your business, which may include you among others. Now, it can give information on supporting business advisors, such as an advisory board, if you're one of the proactive firms and use that sort of approach. It will also include employee details and information on their skills and training. They have an important contribution to make in helping your business achieve its vision, so it's really important to make sure that they are skilled and empowered to help you move your business towards its desired objective. Contingency plans, you may also have a separate action plan in order to cover risk. This is essentially your plan B, dealing with your recovery strategies for things that go wrong. For example, your financial plans might be based on certain assumptions about a range of interest rates. How do you plan to cope if interest rates exceed the range you've planned for? What will you do if your marketing campaign wins far fewer customers than you'd hoped for? What strategies do you have for increasing revenues and cutting costs if things take a plan for make a turn for the worse? But this doesn't deal only with negatives. You could include strategies for taking advantage of unexpected strokes of good fortune, such as a fall in interest rates or a surge in customer demand. You could also include any measures you've taken to protect yourself from industrial relations challenges or false marketing practices. You would also discuss initiatives you've taken to comply with things such as workplace health and safety requirements. You then need to provide a section about your financial plan. Part of that plan will be historical, giving data on the last 2 to 3 years in terms of profit and loss. The historical data will be used along with the marketing and sales forecasts to map out a 2-year financial plan for the business. I always believe it should be at the very least 15 months of detail anyway. Profit and loss and cash flow budgets need to be forecast for every month for the next couple of years. You may also include some financial ratios that give rule of thumb indicators of the health of your company. Much of this part of the plan will fall in line with standard accounting practice and will be of great interest to lenders and investors. Once you've completed the plan, you don't just file it away. It should be a very useful reference management tool. You can use it to keep yourself and your employees on track. It will remind you of what your broader vision is. You can also use the plan as an analytical tool. A business plan is the result of a lot of intense thought about the numbers it contains and should serve you as useful navigation points. The plan won't be out of date when you fail to reach a particular target, such as sales for a particular month. If goals aren't met for 1 month, it's important to find out why and take action to address the issues that caused it. When you do meet targets, it'll be a good time to congratulate your team on a job well done. The work you put into the plan will mean that you're better prepared to face business uncertainties. Stepping back and considering the big picture is an essential part of managing your business risks. You can also take the plan out at important moments, such as when a potential investor wants some serious information about your business. The strengths of your business will be there, well presented and convincing. So a good plan will act as both your guide and your ambassador. Take the time to prepare a sound business plan, and your future may turn out to be as good as you want it to be. It's surprising the number of audiences a business plan can have some interest for and the issues to which it can be put within your business. Let's just run over a few now. The financial part of the plan will help you to maintain a good cash flow, as it will contain realistic projections of revenues and expenses. A look at the plan should alert you when targets are not met and prompt you to take action or to revise the estimates. For example, you may find that you aren't getting the results you expected from a marketing campaign and that you need to make modifications. If you aren't meeting income targets, you may find that your customers are too slow in paying and you need to pay attention to credit management so that you avoid cash flow problems in the future. On the other hand, you may find that you're making more sales than you expected, and this may prompt you to set more demanding goals or to divert revenue to areas such as debt repayment or investment, or even into other ways to further develop your business. If you have a sound business plan, you'll be ready to fine-tune your business strategies. You will have carried out a thorough SWOT analysis, and by the slide you can tell that SWOT stands for strengths, weaknesses, opportunities, and threats. The SWOT analysis can be carried out with reference to your market and the relative strengths you have against your competitors. Another part of the important framework that we use is to make sure that we do scan the external environment, and I recommend that you do the same thing. Too many business managers are of the view that as it's out of our control, we really should just be focusing on the internal happenings of the business, what I was showing in that rocket framework earlier on. However, what is happening out there is really going to have an impact on your ability to achieve your goals. So it really is important to make sure there's a great understanding of things such as what is happening in your industry, what your competitors are up to. Technology, is that something we should be investing in, or is that a bit of a hurdle or a challenge for our future? What are our customers up to, their changing needs, their preferences? The circumstances of the stakeholders is a critical part in determining how likely it would be to achieve a particular vision. And of course, the environment in which we are trading. All very important and all a vital element of that SWOT analysis. When you analyze your competition, you try to anticipate some of their strategies, like cutting prices, for example. You then think ahead and take steps to protect yourself, for example, by strengthening your hold on a particular market niche that is not so price sensitive. I'm not meaning a strategy such as we jump the gun and discount before they do. So what the strategy means is that when market changes occur, you're more likely to have seen them coming, and you'll be in a position to react to them far more quickly and far more effectively. SWOT analysis will also entail looking at industry-wide threats that you may miss if you're busy on your day-to-day operations. You may be so busy making a living that you fail to notice that new technology is being developed, technology that could make your business obsolete. From time to time, you need to ask yourself big-picture questions such as, will my products or services be superseded in 5 years, and how should I start repositioning myself? Threats don't only come in the form of new technology. They may come from new market entrants too. For example, say you operate in an area that is currently relatively untroubled by big business competitors. Preparing a business plan will make you step back and check the horizon for any business giants or franchises or other firms that may have changed course and be headed your way. Say you're a small retailer. In the course of preparing your business plan, you'd assess the chance of retail chains opening new outlets or mimicking your operations in one of their departments. Your business plan will not only prompt you to investigate these contingencies, but make sure you have some resources put aside in order to deal with them. Your business plan will also help you to exploit business opportunities. For example, say you win a large new contract. Now, that can look like a great opportunity, but if it comes as a surprise and your business finds itself scrambling to increase capacity, all kinds of inefficiencies can very easily creep into your organization. A business plan should also provide benefits in the area of people management. It will provide a focus for both you and your team. It will provide a vision that covers everything from marketing and operations to management, personnel, and to finance. When your team has doubts about priorities or direction, they can refer to the plan. They'll have a sense of something bigger than their daily tasks, and this will motivate them to contribute more. They'll be aware of future business growth prospects and what these may offer in personal and in career terms as well. A business plan can also provide an effective way to communicate your business potential to people such as investors, lenders, clients, suppliers, solicitors, new team members, and other creditors too. For example, a business plan will contain a financial history that should convince suppliers that you're reliable. It should be useful when negotiating long-term contracts and discounts, a strategy that many businesses overlook. And when you seek investment or loans, your business plan will be an essential document. Venture capitalists will make an initial assessment based on it. Likewise, bankers will want to see a solid financial history and evidence that you have properly considered risks and threats. You might even want to show the plan to your family, particularly if you have a partner who isn't involved in the business. The plan may help them to understand the long hours you put in, and they may be more willing to support you when they have a clear picture of what it is that you're looking to achieve. Creating a business plan isn't something you do just once either. At any time you undertake a new development, you really do need to both incorporate it into your business plan and see how it affects all the other plans and projections you've been working on. And even in the absence of major new initiatives, the plan ought to be periodically reviewed. For example, when there is a new plant acquisition or a new distribution or inventory management system introduced that may not have figured in the original plan. Sometimes outside circumstances just require out-of-the-box thinking and a fast response. But when you make decisions under those circumstances, it's all the more reason to go back to the plan and work through the impact on other areas of the operation. The unexpected opportunity to buy a piece of machinery at a bargain price may fit in with the overall plan to grow the business, but purchase at this time may mean rethinking your spending on marketing and income projections for the future. Your business plan is a reality check on your vision and your ideas, a tool for tracking your progress towards your vision, a marketing document to promote your firm to finance lenders, prospective partners, or buyers, and importantly, a modeling tool to help you evaluate how changes in one part of the business or the business environment in which you operate are going to affect other sections of the business. So what justifies the additional time and energy you'll spend creating a written plan? Quite simply, that you have created a much increased chance for success. And that's got to be a good thing. And don't think for one moment that I'm expecting you to spend your break or your weekends writing 200 or 300-page novels. That's not the way it needs to be, but it really does need to be written down. It may form something like I have on screen at the moment. And here you can see a very short part of what is actually a 2-page plan, which just takes a snapshot using that rocket framework that I was talking about earlier and identifying what it is that I'm hoping to accomplish in each area. And then each one of those is carried through to the second page where we can build in specific strategic or other initiatives to make it all happen, and deadlines or milestones, as it's sometimes called, in there as well. Now, to include all the components I've talked about, that business plan really needs to include all those elements that I've talked about. But it's not all about making a overly comprehensive document. It's all about putting something together which really does show that you've examined all of the areas that are critical to your business success and are addressing them, and are then able to use this plan as a means to achieve your desired vision. And that is what planning is all about. Working on, not in your business, will greatly assist you to achieve your goals, your dreams, your expectations, particularly the ones that you had when you first decided to go into business. Thanks so much for attending the webinar, and as part of attending, remember we've included an action plan for you, a set of steps that we would suggest that you would start this whole process with in order to make it a reality and to ensure that you implement these particular strategies. So go on, check out the action plan, and remember to look at the other resources that will be following this webinar as well. As well as the action plan, there will be other support resources and other links, all designed to really help you succeed in business, to change your mindset, and to share with you the secrets that are used by the most successful small business owners around. Thanks so much for joining me today. And remember, there's a whole lot of other webinars designed purely to help you increase your profitability, your cash flow, and ultimately the value of your business.